And an even bigger week coming up, by the way. Big day today. Yes, big week coming up. For a start, big tech reports earnings. Apple tomorrow, Facebook, Tesla, Microsoft on Wednesday, Amazon Thursday. David Nicholas joins us, Nicholas Wealth Management President. David, I got to say, I'm a little worried that if any of these big tech stocks, and they don't report absolutely stellar earnings, they'll come down sharply. What do you say?
Well, you know, Stuart, I think it doesn't have to be stellar. I would love for them to be stellar, but I think as long as they're good, I think we're going to be okay, because the good earnings really have been supporting the market. When we have low interest rates the way that we do currently, investors are still buying stocks. So I don't think we need to have blowout earnings. But a company like Apple, I tend to agree with you there. Stocks up over 100%. We need to see some real growth really in their wearables and their AirPods. I don't think in the iPhone sales is where we're going to see growth. So I just think, Stuart, as long as earnings are good, markets are going to be okay, and it could get us out of some of the malaise we're seeing today. Okay, but there's a possibility here that in the absence of good earnings, this market goes south because of big tech. I mean, there is that possibility. I'm very aware of it. Absolutely, yeah. I mean, we got to have good earnings, right? Valuations matter. We've got to have good valuations that come out this week. When we're trading at 18 times earnings, you got to have that being supported by earnings. So if that's not there, yeah, I mean, that with what we're seeing in the markets today, I mean, it could be a pretty ugly couple of weeks for the market.
Okay, hold on a second, David. I want to go to Lauren Simonet at the Exchange. You've got some more industries really taking a hit because of the virus. Go through them for us, please.
Yeah, so we'll start with a positive, and that's Clorox, a disinfectant, right? You hear of these germs spreading, you want to clean everything up. Clorox is up about 2% today, so that's good news there. But take a look now at the luxury sector. Bain & Co. Estimates that China is responsible for a third of global luxury sales. When you hear a number that big and you couple that with the Hong Kong protests that have hit some of these companies' sales, you see LVMH is down 3%. Tiffany is down just a little bit. Hermes is down almost 5% today. Burberry, the list goes on. Two more names for you, Nike and Estee Lauder. Credit Suisse says in the next quarter, if this coronavirus continues to threaten the global economy, they'll take a hit to earnings of 3 to 5%. Stuart, back to you.
Ouch, ouch, ouch. All right, got it. Yep. Thanks, Lauren. Back to you, David. I've got to get your take on this virus. Do you think it's a black swan event?
This is absolutely what we would define as a black swan event, right? We really haven't had this priced in. Again, we're trading at 18 times earning. The market is somewhat priced for perfection. So when you have these things that come out of what we call, left field here, the market has to justify this somehow. And when you look at something like what we call more of a contagion effect or a nesting effect, if individuals in China stop going out to public places, if they stop spending at retailers, that is absolutely going to be priced in to balance sheets and to cash flow. So retailers need to be concerned here. We don't really know how far this is going to go, but I think the way it looks right now, this is going to be a pretty brutal run for retailers in the short term.
As you know, David, the CDC is holding this conference call discussing what's going on with the virus, the latest from their point of view. They've just said that there has been no new virus cases in the United States overnight. The number still stands at 5 cases in the United States. That news is out. It's not made much difference to the market at this point. We're still down 400. David, I got to just ask you about what I see as a contradiction in the polls. There's a Fox News poll that shows President Trump getting enormous support for his performance on the economy, 55%. But in precisely the same poll, a majority, just over 50%, want to throw him out of office. That's something I don't understand. A great economy, and the people want to throw him out. Can you make head and tail of this?
Yeah, Stuart, I'm with you. I don't understand it. So I actually went and looked at who was polled. That poll actually leaned 9% more towards Democrats. So I think we have to keep that in context here, that poll, I'm not saying the poll doesn't matter, because it certainly does, but who was polled I think is really telling there, and it leaned Democrat. So I think that's inside of that margin of error. I think if overwhelmingly Republicans don't want to see him impeached, the good economy is what's going to help Trump in 2020, but I think we shouldn't put as much weight on that particular poll given who was actually polled.
Yeah, that's a good answer, and that really had me wondering. How is it possible that a big majority thinks the economy is just great and Trump did it all for us and they want to throw him out? Good explanation, David Nicholas. Much appreciated. Thank you very
Thanks so much,
indeed.
Stuart.
Sure thing.
Thank you.